Namaste, welcome to Arthaniti, where we discuss money and money matters to help you in your investing decisions. The focus of today's video is going to be Zomato, the food delivery giant, which has been making waves in the Indian stock market. In this video, we will discuss the various factors which will help you decide whether a particular stock is investable or not, and then we will focus our attention on Zomato by analyzing those factors for this stock. So I hope you watch the video till the end, as it is going to add value to your decision of whether Zomato is an investable stock or is it wait and watch. Let's start. Before we go on to analyze the Zomato stock, it is necessary that we know on what basis the analysis has to be carried out. Now, this is not limited only to Zomato. These are guiding principles which all of you should know. When you decide which particular stock to invest in, you should learn about the company on various parameters. Do you know there are 5,566 listed companies on BSE and 2,379 listed companies on NSE? Now, out of such a big basket, which particular stock is investable? How do you decide that? Well, I'll give you some guiding principles which you can apply to any stock when you want to decide if you want to invest your money in it. Now, I'll list down the principles. The first thing that you should learn or study about the stock is its financial performance. Next, market position and competitive advantages. Thirdly, what is the growth potential? What does the future look like? Management quality. Who are the people running the company? Industry trends. Where is the industry heading? What is the future of the industry? And lastly, valuations. So all these six factors are absolutely necessary for you to study before you take a decision of whether you want to put your money in a particular stock or not. Let us begin analyzing the Zomato stock on the basis of fundamental factors which I had listed earlier. Now, firstly, let us look at the financial performance of the company. Well, Zomato has shown impressive growth in recent years. The company's revenue is projected to grow at a CAGR of 55% from financial year 2024 till 2027. The quarter two of financial year 2025, Zomato has reported a remarkable 69% increase year on year basis in its revenue growth. See, Zomato's profitability has improved significantly. Company reporting a net profit of 176 crore rupees for the second quarter of financial year 2025. Zomato has shown an impressive turnaround from a loss of 971 crore rupees in financial year 2023 to a net profit of 351 crore rupees for financial year 2024. The quarter two profit for Zomato, which I had already told you, stood at 176 crores for financial year 2025. Revenue growth also has been very strong. The revenue has surged 71% in FY 2024 as compared to FY 2022. All in all, the company has demonstrated that it has not only become profitable but is also showing strong growth and improved margins across its business segments. Now, let us check the market position and competitive landscape of this stock. Well, Zomato is the market leader when it comes to food delivery business. The market share of Zomato in terms of gross order value has increased from 54% in FY 2022 to 58% in the first quarter of FY 2025. Its acquisition of Blinkit has given it an edge in the quick commerce segment as well. Now, Blinkit's GOV, gross order value, is 81% higher than Swiggy's Instamart. Swiggy is Zomato's main competitor in the food delivery business. While Zomato holds a 58% market share, the remaining 42% is held by Swiggy. In the quick commerce segment, Zomato again is a market leader with its Blinkit leading the pack with a 46% market share, followed by Zepto at 29% and Swiggy Instamart at 25%. Average revenue per user, which is one of the key metrics in the food delivery business. As far as Zomato is concerned, its ARPU, average revenue per user, stands at 95, whereas for Swiggy, the amount is 85. Geographically, Zomato is present in 700 plus cities compared to Swiggy's 653 cities. The restaurant partners for Zomato is 2,47,000 to Swiggy's 1,96,000. Monthly transaction users. Now, Zomato has 18.4 million users who transact on the app monthly. Compare it to 12.7 million for Swiggy. All in all, Zomato has an edge over Swiggy when it comes to profitability as well, where Zomato's profit stood at 176 crores. Swiggy has just broken even with a low EBITDA margin of 0.8%. So this gives Zomato an edge currently over Swiggy, which is its nearest competitor. Next, let us check the growth potential. Now, I've already told you that Zomato is present in 700 plus cities in India. Now, India is home to more than 4,000 cities and towns, each with its own unique characteristics. So, the growth potential is tremendous. With the acquisition of Blinkit, this acquisition offers a significant opportunity for Zomato in the rapidly growing instant grocery delivery market. Now, do you know the global online food market is expected to reach $224 billion by 2027, growing at a CAGR of 11.4% from 2022 to 2027. So, in that 5 years, this market is expected to grow at the rate of 11.4% CAGR. Next, let us look into the management quality of the company. Now, the leadership at Zomato is characterized by innovation and growth, led by Dipinder Goyal, who is the founder, MD, and CEO of the company. His leadership style is characterized by innovation to grow Zomato beyond food delivery businesses. He believes in open communication and is quick to adapt to market changes. The CFO, Chief Financial Officer, is Akshant Goyal, and a compliance officer is Sandhya Sethia. Some of the key well known independent directors on the on the board of the company are Kaushik Datta, Sanjeev Bhikchandani of InfoEdge, who earns Naukri, Sutapa Banerjee, to name a few. Now, the quality of the management is highlighted by its strategic vision to guide Zomato's expansion beyond food delivery and quick commerce. Under this current leadership, the company has achieved profitability in financial year 2024. Innovation is a continuous focus of the management, with initiatives like Blinkit Bistro and exploration of 10-minute food delivery. Under this management, Zomato has maintained its market leadership position. So, all in all, Zomato is in good hands. The next factor to consider is the industry trend. How does food delivery and quick commerce sector in India, what does the future for this sector looks like? Well, it is experiencing rapid growth. Now, some of the reasons for this growth are a smartphone penetration, rising disposable income, and changing consumer preferences. India's food sector is expected to reach $95 billion by 2025, with online food delivery projected to account for nearly 15 to 20% of the total market. Now, this share is set to grow in the coming years. So, the industry as such has good future. Lastly, valuation is very important before deciding on investments. Now, Zomato has been trading in the range of 270 to 280 for a few days now. Motilal Oswal values Zomato at 320 per share, suggesting a good 21 to 22% upside from its current price. However, it is important to note that Zomato's current price to earning ratio is approximately 300 times, indicating high valuations. So the share is not cheap. Next, let us look at the technical analysis factors. Now, price movement, the first factor that we will consider is stock has been quite volatile recently. On 23rd December, the stock opened at 276, dropped at 273, and then rebounded at 280. Today, the stock closed at 279.70. What are the support and resistance level? Now, technical analysis suggests that potential support can be found at 273 levels, with resistance identified near 282 to 290 levels. What is the relative strength index? The RSI indicates that while the stock may have been oversold during its initial drop, subsequent recovery suggests renewed buying interest among investors. Before we end, it is very necessary that we also look at some of the weaknesses of this stock. Well, let us look at some of the weaknesses of Zomato. The company has turned profitable in 2024, but its operations are marred with high operational cost. Well, high costs are incurred in maintaining the vast delivery network and marketing efforts. They continue to impact profitability despite the company's asset light model. Now, reliance on discounts is also one of the weaknesses. Zomato heavily depends on discounts and promotions to attract and retain customers. Well, this strategy is effective for growth, but it has a negative impact on the profitability of the company. The ease with which competitors can replicate Zomato's core offering makes its business model vulnerable to disruptions and intense competition. Some of the operational issues at Zomato. Zomato has experienced security breaches with at least 17 million user records compromised in past incidents. Now, these breaches raise a significant concern about data privacy and user trust. Inconsistent service quality. Reliance on third party delivery personnel can lead to inconsistencies in service quality and customer experiences. The next challenge that the company faces is maintaining food quality. Now, ensuring quality food across different restaurants and regions remains a persistent challenge for Zomato, directly impacting customer satisfaction. Some of the strategic concerns that the company faces, it has limited geographical reach, where currently it is operating in 10 countries, which limits its potential for economies of scale and global market share. Management restructuring. The departure of co-founder Pankaj Chadha and Hemal Jain recently highlight potential leadership instability, which can affect strategic direction of the company. And inefficient expansion is also one of the challenges. Despite substantial funding, Zomato's international expansion has been relatively slow, allowing competitors to establish themselves in new markets. So these weaknesses are something that cannot be ignored before we decide to invest. Some of the recent developments at Zomato that as investors we should be aware of. Zomato has replaced JSW Steel in the BSE Sensex, marking a significant milestone for the company. Now, the company recently completed a 8,500 crore QIP, which was met with enthusiasm from major mutual funds. Zomato's inclusion in Sensex is expected to attract substantial institutional investments, with projected inflows of approximately $513 million. Zomato's inclusion in Sensex makes it one of the youngest companies to join India's benchmark stock index, reflecting the growing importance of new age technology companies in the Indian economy. To conclude, Zomato presents an intriguing investment opportunity in the food delivery and quick commerce sectors. With its leadership position, innovative management styles, and a high growth trajectory, it becomes a formidable investment. But investors should not overlook competitive landscape, regulatory environment, and high valuations that the company enjoys currently. Lastly, it is very important that before you decide on any investment, you think of your long term and short term financial goals. If you are unsure about an investment, seeking an expert advice is always a positive. And if you want to know more about this, or if you have any questions about this video, please feel free to comment in the comments section below the video, and I will be happy to answer your queries. I hope this video has added value in your investing journey. If so, please like, share, and subscribe to our channel for more such educative videos on investing. Until next time, stay safe. Goodbye. See you in the new year.